In this video, I'm going to explain you how to use a 200 EMA or Exponential Moving Average to trade derivatives or trade spot cryptocurrencies. So before jumping into the video, I want to say that an EMA, an Exponential Moving Average, is just an indicator. You may want to combine it with other indicators and always with price action, because price action is the base of the trading strategy, and then indicators are just confirmation or confluence indicators, as I just said. So before jumping into the video, I want to encourage you to follow me in Twitter at trading_soldier, and here I post daily updates and also my views on the market and also my trades and many other insights that you may find helpful. And also you can visit my website trading-soldier.com, where I have a blog that I explain many trading strategies and I go in depth into other many topics. So let's go to the 200 EMA trading strategy. This is a very simple strategy. This is a beginner's strategy, a rookie strategy. So if you want to use it, if you are a beginner in trading, it's very simple to use, to implement. So to implement this strategy, you need to load this indicator on TradingView. You go in TradingView.com, you go here into Indicators tab, and you type here EMA trend. And this is the indicator by Chris Moody. The indicator is EMA trend bars. You click here, and as you said, the indicator is added to my chart. As you see here is a EMA in the color blue, light blue. So if you go here in indicators, we click on the settings, and here in settings we see that the EMA is 200. If we change to 100, for example, we change the EMA to 100. But in this case, we are going to use the 200 EMA. Okay, we click here. Also, I have selected that when the price is above the 200 EMA, the candles are printed in white, and when it's below the 200 EMA, the candles are printed in black. So if we go into the strategy, as you see, you need to know before applying this strategy that the charts, the time frames in the charts are fractal. What means fractal? For example, right now you are seeing the 30-minute time frame chart of the polka dot US dollar, but if we change to the 1 day, you need to know that charts are fractal. The same structures that are formed in higher time frames, like 4 hours, daily time frame, weekly or monthly, the same structures begin forming in the 5-minute charts, and also the 15-minute charts, and also the 30-minute charts and 1-hour charts. So charts are fractal. So we can consider the 200 EMA as a reference point for support and resistance. So for example, right now we are going in a lower time frame, in 50 minutes time frame chart. So as you see, we can the whole trading strategy with the 200 EMA, we can consider when the price is above the 200 EMA. We see here the 200 EMA. When the price is above, we should be taking only long trades. So for example, in this point, the price broke the 200 EMA, and here retested it and go up again, retest, go up again. This time broke down but go up again. So when the price is above the 200 EMA, we should be taking long trades or buying every time the price retests the 200 EMA. As you see, as you may know, this is just an indicator. It's not a holy grail of trading. So there are times where the 200 EMA is broken, then is reclaimed. And for the other side, for the short trades or selling trades, you may want to take short trades when the price is below the 200 EMA. So for example, right now the price is breaking. So when we see that the price is approaching the 200 EMA, we can take a short trade, for example here, and also when here is broken, again short trade. But you combine it with price action. When you see these candles with rejections, like this one, this is a very good example because it's a pin bar. You have a pin bar bearish candle. So you here may enter a short trade, and as you see here, you can have a little bit of profits here. It's the same way as you see here, we have another pin bar right now here. So price is below the 200 EMA. We might expect that here is a rejection, as I said before. Price goes here, bounces and go lower. But if you analyze the price action here, you see a very strong rejection here in this candle, a very strong pin bar with a large wick and a very thin body. So you analyze it. That's why I said before that this 200 EMA trading strategy is not meant to use alone. It's just an indicator, and also an EMA is a lagging indicator because EMAs are calculated in base taking into account the price. So if you use an EMA, you need to combine it at least with price action. I use, for example, other indicators to combine with 200 EMA trading strategy, but you need to combine this. You need to search for confluence between indicators and, as always, with price action. So going back into this trade, for example, here you see this large wick and thin body here. Also see that in this level, you type here, there are horizontal line, there are many rejections, one rejection, two rejections, large wick, thin body, other rejection. This should be our trigger to enter our trade. So we are going for a long trade, and for example, we can target the 200 EMA, okay? But as you see, the price bounces hard, and we also can get more profits. So the base of this strategy, as I said, is using the EMA as a support and resistance level, because EMA is always calculated in base on the price. So identifying the uptrend, for example, in this case where the price broke the 200 EMA, you see we instated a new uptrend. If we take our trend line, you see we have an uptrend right here, okay, an ascending channel right here. If we paste, we go from these points, for example, you see that here we are in an uptrend in this channel, okay. Now we see what the price is going to do, but at the time here is a new uptrend. So this channel, you can trade it using the 200 EMA. When the price is below the 200 EMA, we are going to take a long into the 200 EMA. So price is below the 200 EMA, you should be taking longs into the support level to the 200 EMA to get rejected, and then when the rejection appears there, you should be taking shorts, okay. Again, from this point, when you are in the above the 200 EMA, you should be taking longs when the price approaches the 200 EMA. So when the price bounces to the 200 EMA, you should be taking a long trade, okay. And when the price comes back to the 200 EMA, you should be taking short trades. So you are above the 200 EMA, you may think that the price can revisit or retest the 200 EMA, so you take a short trade, okay. You should be using this as an oscillator from this point, because as I said before, when the price is below the 200 EMA and also coincide with the price action, in the price action you see these rejections, these points, one rejection, two rejections, three rejections, big wick down with a thin body. This is not what I want to see, but
as you see here, you have confluence between other price action rejections here at this level, at this support level. This is a rectangle. I draw myself with this tool here, the rectangle tool. But this is not in the indicator. That's why I say you need to search between confluence, price action, and the 200 EMA. You should only take the 200 EMA as a reference level, as a support and resistance level. And in the other hand, the more the price is getting far away from the 200 EMA, the more explosive or expansive is going to be the movement. So for example, at this point, the price is getting very close, is compressing here. You see the price action, for example, here is compressing, then gets rejected exactly at the 200 EMA, as you see here, and then the price is bouncing back. So here, for example, was a good trade to open here. For example, if you trade here, you had made a little bit of profits. So as you see, this strategy is very simple. It works, and as you see, when the price goes down and finds support, and you see a big pin bar, a pin candle here, you may take a long here, for example. You may take a long, and if you take this long and hold it, you see the price bounces again here. Okay, for example, here the price bounces, then dark maul candle, and then again you can take other long here. But as you see, the price is not predictable by any means. It's not easy to trade, but this is a simple strategy that you can apply to trading Polkadot, Ethereum, Bitcoin. In this example, I use Polkadot because I think that it has a cleaner price action, and also is much, how to say, it's much easy to see the chart here and how the price reacts with the 200 EMA. But you can use this strategy also with Bitcoin or Ethereum. If we go with the Bitcoin chart here, let me delete this. If we go with the Bitcoin chart here, you can see the same, that the 200 EMA, for example, right now in the same time frame, is acting as resistance right now. It pulls back, broke, then retested again, is acting the same way as resistance. Then when it's broken, it acts as support. As you see here, when it's broken, it acted as support, broken again, now is resistance. So you see, also other advice that I can give you is when you are in the settings of this indicator, in the style section, here you can leave the price line activated. You go to the EMA, you see color 0, color 1, color 2. We go to color 0, and here if we deactivate this option, you see the dotted line with the price is not show anymore. If we activate it, you see the dotted line. This dotted line here shows us the exact horizontal level that we are going to take into consideration right now. So for example, if we base the same logic that the Bitcoin price is doing these last days, we can expect two things here. We can expect that the price goes here and gets rejected again and goes down again, and also we can expect that, as it did here, the price may want to break this EMA, go higher also at these levels that are that we have a rejection before, and then comes back again to the 200 EMA to follow up. Okay, these are different approaches to the 200 EMA trading strategy that I just explained you. So that's it for the video. As I said before, this 200 EMA trading strategy should not be used alone. We need always to combine this with price action, because you as a trader, you need and you may want to trade only based on price.
indicators are on top of price. So you are adding indicators to add confluence to the price action and, let's say, have more confirmation about what the price is doing. So you should not be taking an indicator as the main thing in your trading strategy. Okay? As I said before, follow me on Twitter, and here I post my daily views on the market. I post many charts, many other, also Nasdaq, also DXY, Bitcoin, Polkadot, Ethereum. So follow me on Twitter, because I share also news that can influence the market. And as I said, my website, trading-soldier.com, where I post my blog posts. After finishing this video, I will post a blog post in the website. So if you prefer to read this format, if you prefer, rather than watching a video, reading, or you want to have as you say here, for example, in this video I analyze the open interest trading strategy. So here, as you see, I post charts, I explain with bullet points the trading strategy. So if you want to read this strategy that I just explained you, go to my website, and here you can find it completely free. And also you can find other articles that I'm writing and about other trading strategies. So that's it for today. We see you on the next video.